Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to the February 23rd edition of Basis Loaded with Joe Schmit. I am Joe Schmit, joined as always by Paige Driscoll and the entire EverAg Insights team. What we do here is break down the latest NDPSR report. Let's kick it off this week with butter. This butter number coming in at 243.69 represents a plus 4 to the CME 1-week average of 239.80, plus 4 higher than expected basis, and that is with 9 loads traded on the exchange. Those 9 loads, however, did not show up in the weekly volume. Weekly volume on the NDPSR just a smidge over 3 million. So the story on butter is higher than expected basis on lower than expected volume. It looks like cream seems to be getting soaked up elsewhere on the butter demand chain rather than falling to the butter processor. In cheese, blocks 195.31. That represents a plus 7.5 to the CME 1-week average of 187.70, and that is with 7 loads traded on the CME. So of course, 7.5, that's more than 3 times our expected basis. We have come up with some theories on this show as to why we continue to have outsized basis in the blocks. The working theory currently is that export sales made at a fixed price at the end of last year when block prices were elevated continue to ship throughout Q1, and that's pulling that basis higher. Talking to some industry contacts, there's a second theory being floated about that perhaps forward contracts out of the manufacturer were revised this year. So rather than being a plus 2 to prior week's CMER, so rather than being a plus 2 to prior week's CME average, possibly a plus 5 or plus 6 to prior week's CME average on all contracted sales going through the 2023 year. We'll see. What we do know is that the block has seen significantly higher than normal basis throughout the year, and this report is no exception. Also on that higher than expected basis, we had higher than expected volume, north of 13 million pounds. So big volume in the block on a higher than expected basis. In barrels, 164.45, that's a plus 6.5 to the CME 2-week average of 158.72. 6.5 is, of course, at the high end of our expected 4 to 6 cent positive basis, and we were able to achieve that higher than normal positive basis while trading 26.5 loads per week during the 2 weeks that I used to come up with that 158.72 weekly average. So a lot of volume on the exchange. That volume is reflected on the NDPSR, almost 15.5 million pounds. So just massive barrel volume at a higher than expected basis. The loads trading at the CME did little to pull that basis down, as the manufacturer doesn't seem to be having any trouble moving barrels as prices at the CME continue to trend lower. In whey, 39.85. That's plus 3.5 to the CME 1-week average of 36.20. Now it's interesting, the CME was up 4 to get to that 36.20, so we're 1 week past the low. However, prices here on the NDPSR, despite the CME moving 4 cents higher, down a little bit, just a smidge, 39.85. So we have basis contracting, of course, with NDPSR down and the CME up. That causes that basis to contract. This is a trend that we expect, at least in whey, we expect continued shrinking basis in the weeks to come as the CME continues to move back into the low 40s NDPSR levels, probably hang out near this 40-cent level. If you take this February 18th number of 39.85 and understand that most forward contracts in whey are based on prior week's NDPSR, that of course is the February 4th number of 41.37. So the manufacturer had to discount about a penny and a half to move whey this week, but wow, look at the amount of volume that they were able to move. 6,762,000 pounds. So just a massive volume, almost 50% over our expected 4.5 million. And this is, of course, now 3 out of 5 weeks that the whey sales have surpassed the 6 million pound point. And what's interesting, as we talked about earlier, a lot of the milk that flowed into cheese processing channels went into barrel processing with that massive 15.5 million pound barrel sale that they reported this week. Typically, now when you make barrels, you make white whey. Typically, white whey goes into higher end whey proteins. So it looks like they're using barrel whey to make dry whey. And I think that's the only way you can get to this 6,762,000 pound level. So it goes a long way in telling us what is happening in the high-end whey proteins. Obviously, price-wise, they're under a little bit of pressure, and the manufacturer has chosen to divert whey streams into dry whey rather than focusing on high-end whey proteins that don't seem to have a home as of right now. And then lastly, non-fat, 124.80. That represents plus 5.5 to the CME 1 week average of 119.20. We traded 12 loads on the CME. And again, similar to whey, this is an up 5 week, 1 week past the low week at the CME. Prices here on the NDPSR were able to mount a little bit of an uptick with the gains that we saw at the CME. However, nowhere near the 5 cent higher that the CME was able to post. So again, similar to whey, higher CME, steady-ish to maybe a little bit higher NDPSR. Bases are shrinking in both whey and non-fat. Also similar to whey, look at this volume, 27 million pounds. For the second week in a row, just massive non-fat volume. So the manufacturer is moving non-fat in order to stay clear. However, having to do it at a little bit of a discount to get this stuff cleared. If you look back at the February 4th non-fat number, 30.5, a big lowering in price from prior week's NDPSR. However, relative to the CME, still managing to hold a 5.5 cent positive basis. So this is week 3 of 4. For the February pricing cycle, currently getting class 3 of 17.87, class 4 18.90. If you carry current CME equivalents out through the remainder of the 5 week March pricing cycle, currently getting March class 3 17.50, March class 4 18.75. We'll see what they have for us in the weeks to come. Until then, I am Joe on behalf of Paige and the EverAg Insights team. Thanks so much. Bye.